The NFL season just ended, so let's talk about what football has to do with investor relations. And we're going to go back 2 weeks to the Buffalo Bills Philadelphia Eagles game, which was epic. It ended 13-12 and came down to the last seconds of the game. And essentially, Buffalo scored at the end and had to decide, do we go for 2 or do we play for overtime? They ultimately chose for 2 and lost. And the key to what occurred in this scenario and relating it to investor relations is this idea of perspective and adjusting in real time. So let's get back to the Buffalo Bills. The Bills were struggling most of the first half, but had a dominant second half performance. They held the Eagles to 17 yards of total scrimmage in the second half. And they ultimately came back and got the score 13-12 in the final seconds of the game and were faced with the decision, do we go for 2 or do we play for overtime? And this is the key. In this situation or in a business situation, sometimes you have to pause, reflect, and adjust your thinking to get to the right decision. And I would argue in this case, the Bills should have paused and thought through this that, hey, we're dominating, let's extend the game versus we're going for 2 because a loss means we lose home field throughout the playoffs. So let's get to how this relates to investor relations. And a lot of times, executives are emotional when it comes to investor relations. Oftentimes, an analyst will write something or create something or say something that angers an executive at a public company. How can he say that? How can he think that? Who does he think he is? I'll show him. These are all typical reactions that you get at a public company. Now, the key is, what is the best practice in investor relations? Well, the best practice is stability and extending the runway. If the company loses face because someone gets angry about an exogenous actor saying something or doing something, that is valuation destructive for the company. And so the key here is, what are the key considerations when you are faced in a situation that you might be emotional about at a public company as an executive? Well, it starts with this idea that change occurs over multiple quarters, not at a point in time. So if an analyst is saying something to upset you and you're having an emotional reaction, remember, I have multiple quarters to change this person's mind and get to the right positive outcome. Number 2, yes, feel that emotion and anger about what that analyst said, but refocus that energy on changing outcomes. You have 2 or 3 quarters to change that person's mind and execute to get to a better outcome. And then finally, always consider the risk versus reward. Whether you're the Bills or investor relations, you have to choose the right decision based on the updated facts in that scenario to reach the optimal outcome. In the case of the Bills, you probably should have played for overtime. In the case of a public company executive, always refocus that anger into making your business better, and you will always unlock shareholder value. Thanks for watching.